Welcome back to the Deep Dive, where we take a stack of information articles, research, our own notes, and really try to pull out the most important insights, just for you. Today, we're plunging into the, fascinating and pretty complex world of a major player in the global energy sector, PTTEP. That's PTT Exploration and Production Public Company Limited.
That's right. And we've gathered, I think, a really comprehensive set of sources for this deep dive. We're looking at their latest financial reports, investor briefings, detailed strategic plans, and even expert commentary from some leading analysts. Our mission today, it's kind of multifaceted. We're going to break down PTTEP's performance in their second quarter of 2068, get a clear handle on their financial health for the whole first half of that year, and crucially explore their really ambitious long-term plans and their significant investment outlook.
So you're going to come away from this conversation hopefully incredibly well informed, understanding not just the immediate numbers, but the big strategic direction of a company that's absolutely vital to regional energy security. We'll explore how they're navigating the immense pressures of the global energy transition. It's a real tightrope walk, isn't it? It's all about getting to those aha moments, without getting totally swamped in information.
Yes.
Let's jump right in. Okay, let's start by looking at PTT's most immediate financial headlines, straight from their Q2 2068 results. What was the top-line net profit number for this past quarter, and how does it sort of stack up?
Right, so for Q2 2068, PTT reported a net profit of 13,515.3 million baht. Now, that number on its own, it might not mean a whole lot, but what's really significant here is the context. This figure, it actually represents a pretty notable decrease. We're talking 43.6% compared to the same period the year before. Back then, their net profit was 23,977.67 million baht. So this isn't just a slight dip.
Yeah.
A nearly 44% drop year on year. That's quite substantial. It immediately tells you that the quarter, it presented some pretty significant headwinds for the company. It's a stark reminder, really, of the intense pressures facing traditional energy giants in, a volatile market.
That's a massive drop. So this raises the obvious question for us. What were the primary drivers behind this significant decline in Q2 profit?
Yeah.
Because like you said, a 43.6% decrease suggests multiple factors were likely at play, not just one thing.
You're absolutely right. It wasn't a single cause. It was more like a confluence of factors that kind of squeezed them from multiple directions. The company itself, they pointed to three main things. First, there was a reduction in their average selling prices for their products,
Okay.
So that suggests global market conditions for crude oil and natural gas, they were just less favorable than in Q2 the previous year. When prices drop, even if you keep producing the same amount, your revenue naturally takes a hit.
Makes sense.
Second, they experienced an increase in operating expenses. So the day-to-day costs of running their, huge exploration and production operations, things like labor, equipment maintenance, energy for their own ops, those went up.
Right, costs up, prices down, not ideal.
Exactly. And thirdly, there were higher depreciation, depletion, and amortization costs. Now, these are non-cash expenses, but they reflect the consumption of their assets over time. This could mean that more capital-intensive projects have recently come online, or maybe that older, high-value assets are reaching points where their value is being expensed more quickly.
I see.
So basically, they were dealing with getting less for what they sold, while at the same time facing higher costs to produce it and higher non-cash charges. It was kind of a perfect storm, really, pushing down profitability.
Okay, moving beyond just that single quarter, which, can sometimes be a bit of an outlier, how did PTT perform cumulatively in the first 6 months of 2068? The half-year figures, they often give a much broader, maybe more stable picture.
Indeed, yeah. Looking at the full first half of 2068 definitely gives us a crucial, broader perspective. For that whole 6-month period, PTTEP's net profit stood at 30,076.23 million baht, which translates to roughly US $895 million. Their total revenue for the 6-month period was substantial, 148,531 million baht, or about US $4,431 million.
Still huge numbers.
Absolutely. So while those Q2 numbers certainly showed a sharp year-on-year contraction, the half-year figures give us a baseline for their ongoing operational scale and, financial activity. It indicates that despite the challenges, they're still generating significant revenue and profit. This period really highlights the challenge, doesn't it? Balancing immediate market volatility with those long-term strategic goals.
And for many people, especially those following the stock market, the big news often revolves around shareholder returns, right? Dividends. Given these financial results, What did the board decide regarding an interim dividend payment? This is often seen as a strong indicator of management's confidence, isn't it?
It really is. It's always a focal point for investors. And despite that challenging Q2, PTTEP's board of directors actually approved an interim dividend payment. It's 4.0 BAT per share for the first half of 2068.
Okay, so they maintained a payout.
They did. And just to break down the timeline for you, the XD date, that's the ex-dividend date, which determines who gets the dividend, that's set for August 8th, 2068. The official record date for eligible shareholders, so the date you need to own the shares by, is August 13th, 2068. And the actual payment to shareholders is scheduled for August 22nd, 2068.
Got it.
So this decision, it really sends a clear signal of their continued commitment to shareholder returns. That's a key appeal for many investors, even when they're faced with reduced quarterly profits. It shows a degree of financial stability and maybe confidence in their ability to keep distributions going.
Let's unpack this a bit more then. Diving deeper into the operational side of the first half. It's not just about the profit figure itself, but about how much they actually produced and, crucially, at what price. What were the key volume and price dynamics at play here? How did they contribute to that overall financial picture?
Yeah, understanding the underlying operational performance is absolutely crucial to get the full story. PTTEP reported an average petroleum sales volume of 494,552 barrels of oil equivalent per day, that's BOED, during the first half of the year.
Barrels of oil equivalent,
Yeah.
right? That combines oil and gas.
Exactly. It's a standard industry term to put oil, natural gas, other liquids into one comparable unit. And what's positive here is that this volume actually represents a slight increase compared to the first half of 2067, so their production efforts are indeed yielding more output.
Okay, so volume up slightly.
Right. And this volume increase wasn't just random, it was mainly driven by a few key things. First, the G161 project, that's a cornerstone of Thailand's gas supply, it significantly boosted its natural gas production rate, starting back in March 2067. That's a critical domestic asset. Second, they saw increased crude oil sales from their Malaysia Block K project, which highlights some of their international operational successes. And third, the company increased its investment stake in the Sinform project back in April 2068, and that also contributed meaningfully to the growth. So yes, they successfully increased their output, which is commendable.
But there's always a but, isn't there?
There usually is. The challenge came from the other side of the equation, price and cost pressures. So despite that slight increase in volume, the average selling price for their products actually decreased to US $44.85 per BOED. This was mainly, as we touched on, due to the downtrend in global crude oil prices during that period. So they were selling more, but each barrel equivalent was fetching a lower price in the market.
Gotcha. Selling more for less.
Pretty much. And at the same time, their unit cost, so the cost to produce each barrel equivalent was reported at US $30.99 per BOED.
Wow, so $30.90 out of $44.85 is just cost.
Right. It means for every barrel equivalent they sold, nearly 2/3 of the revenue was basically eaten up by production costs. This combination increased volume, lower selling prices, and those persistent unit costs directly explains the squeeze on the overall profitability we saw in Q2 and the first half. It's a classic margin compression scenario.
Okay, this is where it gets really interesting, I think. Beyond the immediate financial performance, which as we've seen faces some, headwinds, PTTEP has laid out this comprehensive 5-year strategic plan. What are the core pillars of this really ambitious strategy? And what kind of monumental investment are we talking about over this period? This isn't just about weathering the current storms, right? It's about charting a course for the future in this rapidly changing energy world.
You've absolutely hit on the crux of PTTEP's long-term vision. This strategic plan, it's incredibly ambitious. It clearly outlines their roadmap for navigating this evolving energy landscape from 2068 right through to 2072. It's firmly centered on what they've termed drive, decarbonize, and diversify.
Drive, decarbonize, diversify. Okay.
Yeah, and it's not just a catchy slogan. Each pillar represents a distinct and frankly, absolutely vital aspect of their long-term growth, their resilience, and their sustainability in an energy world that's grappling with climate change and demand shifts. And the financial commitment, it's equally significant. It really underscores how serious they are. They've earmarked a total investment budget exceeding US $33 billion. Specifically, US $33,587 million for this 5-year period.
$33 billion. That's huge.
It speaks volumes about the scale of their planned transformation. So let's quickly define each pillar. Drive. That's all about accelerating and enhancing the value of their core exploration and production, or EMP, business. That's their bread and butter, right? Ensuring continued energy supply, especially for Thailand. Decarbonize, well, that's their profound commitment to achieving net zero greenhouse gas emissions by 2093. A massive, complex undertaking for an energy company like this.
Definitely.
And finally, diversify. This involves expanding into new, forward-looking businesses that align with the global energy transition, consciously moving beyond their traditional fossil fuel base into areas like renewables and advanced energy solutions. This strategic framework, it really captures their dual objective, securing present energy needs while at the same time building a low-carbon future.
Okay, let's take a closer look at Drive first, because as you said, this is the core of their current business. What are their key focus areas for boosting petroleum production under this pillar? And what kind of capital is allocated specifically for this in 2068? It sounds like they're really pushing to maximize what they already have while investing in new production too.
They are indeed prioritizing their core business. And this Drive pillar gets the largest capital allocation for 2068. We're talking US $3,676 million. The strategy is sort of multi-pronged. Firstly, they are absolutely focused on maintaining and increasing production from existing projects, the ones critical for Thailand's energy security. We're talking about vital domestic fields like G161, which is Erawan, G261, or Bongkot, plus Arthit, S1, Contract 4, and the Malaysia-Thailand Joint Development Area. These are the workhorses, basically, ensuring a steady supply of gas and oil.
The backbone.
Exactly. They also include key international projects like Zatika and Yadana in Myanmar, which are significant suppliers of natural gas into Thailand. It really shows how intertwined the regional operations are with domestic needs. Beyond those, other important production projects in Malaysia and Oman also get substantial investment under this pillar. Shows their broad regional footprint. Secondly, a big chunk of this budget, an additional US $1,464 million, is specifically for accelerating development phase projects, pushing them from just being plans into active production. This is about bringing major new energy sources online.
So building new capacity.
Right. These include large-scale ventures, think the Gasha concession and Abu Dhabi Offshore 2 in the UAE, both significant gas discoveries. Also Mozambique Area 1 in Africa, which is a major LNG project, and several Malaysian projects too, like SK405B, SK417, SK438. The clear goal here is to make sure these projects start production right on schedule, adding new substantial volumes to their portfolio and securing future revenue.
Which isn't always easy with projects that big, I imagine.
Not at all. The challenge, of course, lies in navigating complex regulations, managing geological uncertainties, ensuring timely execution, often in remote or challenging locations. And finally, PTTEP is also investing an additional US $127 million in exploration for long-term growth. This isn't just about current production or immediate development, it's about future-proofing their reserves.
Finding the next generation of fields.
Precisely. This involves continuing exploration drilling, appraisal wells, and existing projects across Thailand, Malaysia, Myanmar. The aim is to ensure a healthy pipeline of future reserves, replenish what they produce, and secure their long-term viability. It's a massive undertaking, managing such a diverse portfolio.
Given these ambitious plans under Drive, it's clear PTTEP expects to grow its output. What are their projected petroleum sales volumes for the next 5 years? That growth trajectory really tells a story about their confidence.
That's a great point. These forecasts give a tangible measure of their growth ambitions. Their forecasted average petroleum sales volumes show a clear, although slightly fluctuating growth path over the 5-year plan. For 2068, they're projecting 507,000 BOED. This is set to rise to 541,000 BOED in 2069. Then it sees a slight dip to 528,000 BOED in 2070, but then a significant jump to 585,000 BOED in 2071.
2071. That must be when those big projects come online.
That's almost certainly it. That substantial leap anticipated in 2071 likely corresponds to those major development projects we just discussed. Abu Dhabi Offshore 2, maybe Mozambique Area 1 finally coming online and contributing significantly. After that, they expect to stabilize around 581,000 DOED in 2072. It demonstrates their commitment to not just maintaining but substantially increasing output, which is critical for their finances and for national energy security. It also underlines the long lead times for these massive E&P projects.
Okay, now let's turn to decarbonize. This feels like the truly challenging part for any traditional energy company, doesn't it? What specific steps are they actually taking to reduce their environmental footprint and achieve those net zero aspirations, especially when they're still committed to increasing fossil fuel production? This is where that inherent tension really comes through.
This pillar represents a profound, transformative shift in their operations and a significant commitment to sustainability. It's backed by a dedicated budget of US $77 million just for 2068. And the tension you highlight, it's very real. How does an E&P company keep producing while aiming for net zero? Their strategy tries to address this head-on. PTTEP aims to achieve net zero greenhouse gas emissions by 2093. Now, it's important to specify this target focuses on Scope 1 direct emissions from their own operations, like flaring or equipment leaks, and Scope 2, the indirect emissions from energy they buy.
Right, not Scope 3, the emissions from customers using their products.
Correct. This target specifically applies to their E&P operations where they have operational control. And to guide this long-term goal, they've set clear interim targets. They aim to reduce greenhouse gas emission intensity from their 2063 baseline by at least 30% by 2073, and then by 50% by 2083. These interim milestones provide some accountability along the way.
So concrete steps.
Yes. And a really significant pioneering initiative in Thailand is the Arthit Carbon Capture and Storage Project, CCS. This is their first carbon capture project, and it's a critical step in directly addressing emissions from their core E&P activities. The front-end engineering design, or FEED, for this project is already complete.
FEED. That's like the detailed blueprint stage.
Exactly. It outlines the exact technical specs and costs. And a final investment decision, or FID, is anticipated in 2025. FID is the crucial moment where they commit the massive capital to actually build it. So completing FEED and expecting FID means this project is very close to breaking ground.
A big step.
Huge. This project is designed to capture a substantial amount of CO2, between 0.70 and 1.00 million tons of CO2 equivalent, MTCO2e, annually. To give you a sense of scale, that's roughly like taking maybe 150,000 to 200,000 cars off the road each year.
Wow.
It really underscores their proactive approach to directly mitigating emissions from their core business. It shows decarbonize isn't just about future emissions, but actively capturing existing ones.
And what's truly fascinating here is how they're also looking beyond their traditional business with that third pillar, diversify, embracing entirely new energy frontiers. Where are they allocating resources for these new ventures? And how significant is this pivot for a company so known for oil and gas? This really signals a potential long-term shift in their identity.
This diversify pillar is indeed where we see PTTEP truly investing in the broader energy transition. There's an additional US $1,747 million allocated over the entire 5-year plan, strategically separate from their core E&P budget.
Okay, so almost $1.8 billion just for diversification.
Right. This substantial amount shows a serious commitment to building future growth engines. They're venturing into several exciting new areas. First, there's significant investment in renewable energy. A prime example is their 25.5% stake in the Seagreen offshore wind farm in Scotland.
Offshore wind in Scotland. That's quite a move.
It is, and this isn't a small pilot project. Seagreen is one of the world's largest offshore wind farms, capable of powering over 1.6 million homes. Their involvement demonstrates a tangible foray into large-scale, established renewable power, diversifying their portfolio significantly. They also have an existing 9.9 megawatt solar power plant, already supplying electricity to their S1 project, showing a mix of established and new renewables already integrated. Second, PTTEP is heavily investing in low-carbon fuel development, particularly focusing on clean fuels like green hydrogen.
Green hydrogen, okay, that's seen as a big future fuel.
Exactly. Green hydrogen, produced using renewable electricity, is seen by many as critical for hard-to-decarbonize sectors, heavy industry, long-haul transport. They have active projects like one in Oman, which could be a game-changer for future energy supply, potentially positioning them as a key player in the nascent hydrogen economy. Third, they're not just doing CCS for themselves, they're developing carbon capture and storage as a service. CCS.
CCS as a service, so helping other companies capture their carbon.
Precisely. They plan to offer CCS solutions to other industries struggling with emissions, positioning themselves as a provider of critical decarbonization infrastructure. This includes the potential for a large-scale CCS hub in the Gulf of Thailand, which would aim to capture and store CO2 from various industrial sources across the region. This could be vital for regional decarbonization.
Leveraging their existing skills, I guess.
Absolutely. It leverages their geological expertise. And finally, they're reserving funds to invest in new businesses and technologies through a corporate venture capital approach, CVC.
So acting like a venture capital firm, investing in startups.
Kind of, yeah. Investing in promising startups and cutting-edge technologies. This includes exploring opportunities in areas like artificial intelligence and robotics. For an energy company, AI could optimize drilling, predict maintenance needs, enhance geological analysis. Robotics could be used for inspection, maintenance, dangerous tasks. This CBC approach reflects their vision to transform into a truly low-carbon organization by embracing innovation across the board, moving beyond just oil and gas into a broader energy and tech landscape. It's very forward-looking.
That's a really comprehensive strategic outlook.
Yeah.
Now, let's shift focus a bit to some tangible achievements and milestones that PTTEP has hit recently. What are the key expansion successes they've marked, particularly in the first half of 2068? It sounds like they've been pretty busy on the ground growing their footprint.
They certainly have been active. PTTEP made significant strides in expanding its E&P business, not just in Thailand, but crucially, in key strategic regions globally during the first half of 2068. In Algeria, for example, they successfully won the Regain the Second concession. They hold a 34% stake alongside Eni Algeria. What's particularly notable is they've already discovered natural gas there, which kind of de-risks the investment and it holds further exploration potential.
And that's near their existing project there, right?
Exactly. Regain the Second is located very near their existing Algeria Tuat project. This proximity allows for integrated development, shared infrastructure, operational efficiencies, basically lowering costs and maximizing value from the region. Then the Middle East, a vital region obviously, PTTEP signed an agreement to extend the production sharing contract for Oman Block 53 all the way until 2093.
Wow, 2093, that's long-term security.
It really is. Secures their operations there for decades, providing stability and predictable cash flow from a mature asset. Additionally, they received approval from Abu Dhabi authorities in the UAE for the development plan and production concession contract for Abu Dhabi Offshore 2, following a successful gas discovery there. This approval is a crucial step towards that final investment decision, the FID, bringing it closer to becoming a producing asset and adding significant future volume.
And domestically. And he moves there.
Yes, domestically they also enhanced their portfolio. They saw increased natural gas production rates from the G161 project, Erawan, starting in March 2067. That's fundamental for Thailand's energy security, reducing reliance on imports. And they also increased their investment stake in the Sinform project back in April 2068, further solidifying their position in key Thai energy assets. So it's a balance, really. Strategic international expansion and strengthening domestic contribution.
What's fascinating here, as you touch on, is how PTTEP's role extends beyond just its own business and expansion. They're also a huge economic contributor to Thailand, their home country. How much revenue did they actually channel back to the government in the first half of 2068? And what does that really mean for the nation?
That's an excellent point, highlighting their broader societal and economic impact. In the first 6 months of 2068, PTTEP remitted over 30,200 million baht to the Thai government.
Over 30 billion baht.
Yeah, which is roughly what? Almost US $900 million. It's a substantial contribution. And it comes in various forms: income tax, royalties from production, other benefit sharing mechanisms from their agreements. All these funds go directly back into the state budget and are used by the government for national development initiatives. We're talking direct investment into vital public services, community development, education, healthcare, funding crucial R&D.
So a direct impact on people's lives.
Absolutely. Furthermore, the government also directly receives a physical share of the petroleum produced from key projects like G161 and G261. These operate under production sharing contracts, PSCs, which means the government isn't just getting tax revenue, they're getting a tangible direct share of the oil and gas itself.
Okay, so actual barrels or cubic feet of gas.
Exactly. This adds another powerful layer of direct revenue that can be used for national development. It provides a consistent, fundamental source of funding for public services and economic growth. So, yeah, it's not just about their financial performance as a company, but their very real, tangible contribution to the nation's well-being.
And they just marked a pretty significant corporate milestone, didn't they? Their 40th anniversary back in June 2068. What does this long history signify for their ongoing mission, especially as they look to the future and try to balance all these different priorities? It's more than just a birthday, right? It speaks to endurance and evolution.
Precisely. Celebrating 40 years of operations is, well, a profound testament to their longevity, their resilience, their adaptability in what's arguably one of the most challenging industries globally. This long history really signifies their deep-rooted commitment to the government's objective of ensuring national energy security. For 4 decades, they've been a foundational player in powering Thailand. They've transformed from, a nascent national explorer into a proper international energy powerhouse.
Quite a journey.
Definitely. With operations now spanning over 50 projects in 13 countries, their 40th anniversary reinforces that their mission is ongoing, constantly expanding. They continue to explore new energy sources, new frontiers, showing an incredible capacity for evolution. Their overarching mission they articulated as power for all, which speaks volumes, I think. It aims to not only drive the nation forward through stable energy supply, enabling industries and infrastructure, but also to empower individuals by ensuring access to the energy that underpins modern life. So it's about a foundational role in the economy, a commitment to future energy security, and a broader societal impact that continues to evolve.
Okay, so we've explored the immediate financials, the ambitious strategy, the tangible achievement. Now, what does all of this mean for people looking at PTTEP from an investment perspective? How are analysts weighing these results and the company's future outlook? We've seen the numbers, the strategy, but how is the market actually reacting to this complex picture?
Right, that's where the rubber meets the road in terms of valuation. And we're seeing, well, a mix of perspectives from brokerage firms. It really reflects the complexities and uncertainties in the energy market. And it's important to note a timing thing here. A lot of the analyst commentary we're looking at actually dates from our present day, 2025, looking forward and anticipating PTTEP's fiscal year 2068 performance. This foresight is key.
Okay, so these are forecasts made before the 2068 results we discussed were fully known.
Exactly. For instance, UOB Kay Hines Securities in their April 29, 2025 report, so well before the Q2 2068 results came out, they maintained a BUY recommendation for PTTEP. They set a target price of 155 BAT, indicating what they saw as significant potential upside from the share price at that time. Their confidence mainly stemmed from anticipating continuous earnings growth, driven by, they thought, increased sales and lower production costs. They also highlighted what they saw as an attractive dividend yield, always a draw for income investors.
And what were their assumptions about prices back then?
Good question. PTTEP's internal forecast for 2025 crude oil was US $65-75 per barrel. UOBKH acknowledged potential downward volatility. They expected a small surplus in 2025. But they noted a limited downside because U.S. shale oil production costs were around $60 a barrel, suggesting a kind of floor price. For LNG, PTTEP projected 2025 prices at $14-15 per MMBTU. That was a notable increase from $11 in 2024. They attributed this to a 7% year-on-year demand increase, especially from Europe looking for gas, against a more modest 4% supply growth. So, pretty positive picture for gas revenues.
On volume forecasts.
Right. UOBKH noted PTTEP's guidance for 2025 sales volume was 505,510 KBD, so a 3-4% year-on-year increase. A key factor was that Arthit Project gas sales agreement amendment, boosting its contracted quantity from June 2025. They also noted PTTEP's Q1 2025 profit was in line with their expectations. Sales volume in Q1 was slightly down quarter-on-quarter, 484 KBD, but that was due to temporary things like crude loading cycles and a maintenance shutdown at Bangkok. Average selling price is flat, unit costs increased a bit due to depreciation and a write-off, but crucially, operating expenses actually decreased, which was a positive sign.
So looking ahead to Q2 2068, they were pretty bullish back in April 2025.
They were. They anticipated a quarter-on-quarter increase in core profit before the actual results. They projected sales volume increasing to 505 KBD. They also forecast a 3% drop in unit costs and stable gas prices. These positives, they thought, would largely offset a projected 5% dip in crude oil prices for Q2 2068. And for the full year 2025, UOBKH estimated a dividend of 9.6 BAT per share, implying a really healthy 9.7% yield. Very attractive for income investors, signaling confidence.
Okay, so that's a pretty bullish stance from UOB Kay Hines, based on their pre-Q2 assessment. But what about other brokerages? Especially ones reporting closer to the actual Q2 results announcement when maybe more current info is available. Do they share that optimism?
Not entirely, no. Uonta Securities offered a more cautious, more tempered perspective in the report from July 25, 2068. So this was just anticipating the Q2 profit right before the release. They forecasted a profit of 13 billion baht, which, if it happened, would be a 21% drop quarter-on-quarter and a big 46% drop year-on-year.
A very different picture from UOBKH's earlier forecast for Q2.
Completely different. Uonta attributed this expected decline to a few things. A high base from the previous year, meaning Q2 2067 was unusually strong, making the comparison look worse. Plus, weakened sales volumes, lower selling prices driven by global oil trends, and increased production cost. Compared to Q1 2068, even if sales volume ticked up slightly due to operational cycles, they still expected profit to fall. Why? Lower average selling price due to oil prices, higher G1, G2 production costs, and a specific one-off write-off from pulling out of a project in Mexico.
So more headwinds identified closer to the time.
Exactly. For the second half of 2068, Yuanta projected profit would kind of hover between 13-15 billion baht per quarter, relatively stable compared to Q2.
Yeah.
However, they believed any volume increase would likely be offset by slowing selling prices, and they felt cost reduction efforts would have limited impact this year. So their overall view was that H2 2068 profit might not be particularly strong compared to H1 or the previous year. Kind of flat or maybe even declining momentum.
So what was their final recommendation?
Well, if Q2 met their expectations, H1 profit would be about 52% of their full year 2068 forecast of 57 billion baht, which itself was a 28% year-on-year decrease. Despite this projected decrease, Yuanta still considered the financials good in an absolute sense. They pointed to a decent return on equity, 10.2%, a strong balance sheet nearing net cash, and potential for high dividends. But due to limited upside potential they saw, slowing profit momentum, and a less than promising oil price outlook for H2, they actually downgraded their recommendation to speculative buy.
Speculative buy. So still a buy, but with more caution.
Right, with a target price of 116 baht. They still noted its appeal for dividend plays, expecting a 2.8% yield just for H1 2068, lower than UOB-KH's estimate, but still significant. So yeah, a decidedly more tempered view as the actual results got closer.
That's a fascinating contrast between the analysts.
Yeah.
What about the general sentiment or public discussion around PTTEP? Especially on platforms where, individual investors share their thoughts, sometimes the street view can be quite different.
That's a great point. Public sentiment can definitely influence short-term stock moves and reflects a different kind of market feeling. There was a user comment on PTTEP, which is a popular Thai web forum, for example. It kind of reflected skepticism towards some of the more bearish broker forecasts. This user suggested that if PTTEP's Q2 profit surprisingly exceeded 14 billion baht and the dividend was around 4 baht, then the stock might still see an upside and maybe reaching 130 baht.
So hoping for a positive surprise.
Exactly. It really highlights that while official forecasts from analysts are important, there's always this public anticipation, maybe hope for positive surprises, especially around dividends, which often drive retail interest. This public sentiment often looks for catalysts that might defy the analysts, particularly if the company shows resilience and maintains strong shareholder returns. It shows a hope for better than expected performance, despite the more cautious outlooks.
Finally, let's consider PTTT's standing in terms of ESG, environmental, social, and governance performance. This is increasingly vital for investors looking beyond just the financials, right? How does PTTEP stack up here, especially given its core business is fossil fuels? This is where long-term sustainability and societal impact really come into play.
PTTEP actually demonstrates a remarkably strong commitment to ESG principles, which, as you say, is crucial for long-term sustainability, attracting a broader investor base, and maintaining that social license to operate. They've received high ESG ratings from reputable bodies. Liberator assigned an impressive AA rating in the set ESG ratings. UOB-Kay reports an even higher AAA rating.
AA and AAA, those are top tier, especially for an E&P company.
They really are. It indicates strong performance across the board. On the environmental front, their commitments are clear and ambitious. We've talked about their leadership in Thailand's first carbon capture project, Arthit CCS, targeted for completion by 2026. That's crucial for their 2050 carbon neutrality and 2065 net zero goals. It shows tangible effort. Plus, they've diversified into significant renewable energy investments, like that 25.5% stake in Scotland's Seagreen offshore wind farm. It demonstrates a strategic shift, not just token investments.
And on the social and governance side.
Socially, PTTTP invests actively in community development. They support education, healthcare, infrastructure in their operating areas, aiming to improve quality of life and foster sustainable development. They also prioritize employee welfare, fair labor practices, safe work environment, continuous training. That contributes to a supportive and skilled workforce. And for governance, their framework is robust. It includes strict ESG assessments for suppliers, ensuring ethical procurement. They also have a comprehensive ESG risk management system with regular assessments, adhering to international standards. This commitment to transparency, accountability, and ethical operations is fundamental to those high ESG ratings. It gives investors confidence that the company is managed responsibly and sustainably.
Okay, but no company, especially in an industry as dynamic and frankly risky as energy, is without its challenges. What are the key risks PTTTP identifies? And crucially, how are they preparing to navigate and mitigate them in what's an increasingly complex global landscape? It's not just about what they do well, but what they're ready for.
That's a critical point. Understanding the risks is just as important as understanding the opportunities. PTTEP has articulated a clear understanding of its significant risks and, importantly, has specific strategies in place to mitigate them. That proactive stance is key. First, there's the inherent volatility of oil and natural gas prices. The risk is huge because prices are so sensitive to global economics, geopolitics, supply-demand shifts. Unpredictable fluctuations hit revenue directly.
The biggest external factor, probably.
Very likely. To counter this, PTTEP is actively diversifying its portfolio towards cleaner and alternative energy renewables, green hydrogen. These often have different market dynamics, providing a kind of natural hedge. They're also strategically investing more heavily in LNG and natural gas markets, where demand seems consistently high, particularly from Asia and Europe, aiming for a more stable revenue stream than volatile crude oil. Second, in today's digital age, cybersecurity threats are a growing concern. The risk is that sophisticated cyber attacks could disrupt operations, compromise data, even cause safety issues.
A risk for almost any large company now.
Absolutely. To mitigate this, PTTEP has a dedicated Cybersecurity Operations Center, a CSOC, actively monitoring and responding to threats 24/7. They also use proactive measures like phishing simulations for employees to raise awareness and maintain robust backup and disaster recovery plans to minimize disruption if something does happen. Third, the energy sector is heavily regulated globally. So a significant risk comes from legal and government policy changes. Changes in laws, regulations, policies in the countries they operate in could impact their business model, increase costs, impose restrictions, even delay projects.
A constantly shifting landscape.
It is. PTTEP addresses this by closely monitoring changes in each country. They have dedicated legal and public affairs teams. They also emphasize strong collaboration with government agencies and regulators, engaging in dialogue to ensure operations can adapt smoothly. Finally, and increasingly prominent, is the risk from environmental and sustainability policies, especially the global push towards net zero.
The big one hanging over the industry.
Exactly. The risk is profound. Stricter regulations could alter the operational landscape, raise costs, limit production, maybe even strand assets. PTTEP is directly confronting this by investing in those CCS projects, like Arthid, designed to capture CO2 from their processes. Furthermore, they're committed to developing and expanding renewable energy projects. Green hydrogen, offshore wind, aligning their business with a lower carbon future, proactively transforming rather than just reacting. It's a comprehensive approach to try and future-proof their business.
We've covered a huge amount of ground today, from PTTEP's recent financial performance, highlighting those market impacts and strategic pressures, all the way to their monumental strategic investments in both their traditional core energy sources and these new transformative energy solutions. It's really clear they're navigating an incredibly complex and fast-evolving landscape.
Indeed. It's clear that while PTTEP faces those immediate pressures, fluctuating prices, rising costs, their drive, decarbonize, diversify strategy shows a proactive, robust, and, incredibly ambitious approach to future-proofing their business. Their foundational commitment to ensuring Thailand's energy security is deeply intertwined with their global expansion ambitions, and crucially, that significant pivot towards low-carbon solutions. This is truly a company in motion, balancing today's needs with tomorrow's demands, actively adapting.
And their 40th anniversary, celebrated back in June 2068, it really underscores that long-standing mission to be a power for all, serving both the nation and its people. A mission that's clearly evolved over 4 decades, but remains, at the core of their identity.
So here's something to think about. As PTTEP balances this foundational role in traditional petroleum with its aggressive push into green hydrogen, offshore wind, and these large-scale CCS projects like the proposed hub in the Gulf of Thailand, what will be the ultimate impact of this dual strategy? How will it affect the broader energy mix and economic development of Southeast Asia over the next decade? Can a major legacy energy player truly transform its core identity while still powering a nation? And what might that mean for you as a consumer, an investor, or just someone watching the global energy transition unfold in the years to come?